Welcome back. Taher Badshah, Senior Vice President and Head Fund Manager at Motilal Oswal Asset Management Company is joining us. Taher, good morning. Prashant here. I just want to start with banks. If I look at the Motilal Oswal 25 focus portfolio, almost 50%, over 50% of your portfolio is in two sectors, autos and banks. Let me just address banks specifically. With the SR Rosneft deal, which was announced at the beginning of this week, many have turned very bullish on corporate-focused banks. You don't have exposure to, primarily what you would describe as corporate-focused banks, the ICICIs or Axis. You have investments in HDFC Bank, etc. As a fund manager, do you feel comforted? Also because some of these banks are trading at deep discount to the HDFC banks of the world. Are things changing? Is the tide turning? Taher, what's your view?
So gradually at the margin, you may be right that there could be some tide which turns in favorably for some of the more corporate focused banks or some of the public sector banks, but that doesn't necessarily mean that growth will get constrained for the other banks, because broadly we are also seeing, in addition to some of the stress getting addressed, in addition to which we are probably also likely to see some improvement in overall credit growth, or getting better compared to what it has been in the last couple of years. So if that were to happen, then in any case there is growth for other banks as well, the private sector banks as well, and some of them have been smartly gaining market share as well from quite a lot of the other part of the public sector space. So because the public sector space also is pretty wide, and there is a lot to offer in terms of market share out there, or a lot to take in terms of market share out there. So we don't really think the growth opportunity is going to get constrained, and in general we've kind of kept a lesser eye on valuations while taking our stock positions or taking our portfolio positions. We've been more worried about or concerned about longer term growth and longer term structural benefits. So I think from that perspective we are fairly well positioned. I think amongst the public sector banks we do have a little bit of exposure now. It's not that we don't have any exposure at all, and I think we are comfortable with that exposure that we have at this stage.
Taher, what's your view on the markets? We've been kind of stop and start since the surgical strikes and the Nifty, breaking even that level post that.
So I think as we all know, the internals of the market are not bad at all, and things are gradually improving. We've got a good amount of things going for ourselves from the government side, both in terms of reforms, activity levels picking up, investments going up, and so on, the FDI. So that's happening at the monetary level too. We are relatively comfortable, as you know, both in terms of inflation as well as in terms of interest rates. But the only thing that is now coming back into focus is the upward spike in commodity prices, and that's something which one has to guard oneself against, and that is something which may kind of tell on some parts of the market. So I think, and the other of course being that we need to see, still we are waiting for that hump of the growth to come back into the overall numbers. So I think in that regard, at some levels there is a certain amount of valuation which has already been built in and baked in by the markets. It wants to see more evidence of growth coming into the system. Maybe this quarter will show up a little bit. Larger expectation is out of the second half, and if we see numbers supporting, then I think we will make further headway up into the market. Till then it will be a kind of a gradual approach, I would think. I don't really see any reason for any great deep corrections unless influenced by significant unexplained external events.
Taher, I request you to stay with us. We have to take a mandatory commercial break. Let's do that. Back with Taher on the other side. Welcome back. Taher Badshah, Senior Vice President and Head Fund Manager at Motilal Oswal Asset Management Company is with us, and we're talking with him. Taher, thanks for staying on while we took that break. You have exposure to some pharma stocks. I know you can't talk specific stocks, but I understand that you recently purchased some quantity of Jubilant Life. It's done phenomenally well. I don't know if you want to talk about the sector or prospects for the company, that would be great.
So yeah, we've got some exposure to a few mid-sized pharma companies, and I think some of them have been with us for a fairly long period of time, and I think basically these have been kind of very bottom-picked opportunities where we've seen typically these companies being very strong in the domestic circuit and having decent cash flows out of that domestic business, plus looking forward towards the opportunity of making a breakthrough in the US markets and the developed markets, other developed markets. So I think it has helped us be in good stead, because larger part of the business till now has been driven by domestic, and that's ticked along pretty well in terms of growth and without significant regulatory challenges at their end. I think now the US opportunity or the developed market opportunity, generics opportunity for some of these is now on the cards, and we are looking forward to that part of the growth option to start crystallizing. So all in all, these stories have kind of panned out pretty well, especially in light of the fact that the sector hasn't done too well. And that's been the approach. It's not really been a sector call. It's largely been
Jubilant Life is a new addition to the
yeah, that's something that we've added more recently. But again, the story is largely the same. That we kind of like companies where, at least in this sector, one needs to be a little more careful about regulatory challenges if they are behind, and then if you are reasonably comforted with growth, then I think
you'd look to build positions here, obviously, across funds, because obviously you like the story.
This is something which is not a matter of, something which I can talk about, but yes, as you have identified, this is as part of the disclosure, it is in the portfolio as of now.
Has IT become more and more a stock-specific story as well? Something that the pharmaceutical space is, especially post this quarter?
I don't think so as yet. There is still quite a lot of sector or broad market headwinds which exist, and a little bit of a structural headwind also which exists for this sector. This structural headwind is entirely not crystallized, and some companies, smarter ones, are trying to defend it and fend off that structural headwind. But it is still, there is a fair bit of slower activity on the ground overall, and I wouldn't say that it is at this stage very stock specific, barring those which are not necessarily linked to IT services, but probably are a combination of IT related but product services. Those are opportunities which probably are less headwinded. But otherwise, barring those, I think most of them are facing similar kind of challenges.
Just one last point, as far as autos are concerned, as I began the interview by saying autos banks are some of the largest, occupy top slots in terms of overall weight in the portfolio. In your assessment, are autos, especially players like Maruti, set for, they've kind of moved on into another gear altogether, right? Some of the numbers they're reporting monthly, they're very large, and it's a big step up from as recently as last year.
Yes, that's correct. So I've said this on earlier occasions also that in case of stocks like, let's say, Maruti in particular, particularly the car industry, we've now need to get into a situation where the volume growths need to come back. The last couple of years were substantially driven by margin expansions and benefits on raw materials and so on, and that they've exploited it to great effect. And I am happy to see that the volume trajectory is now, as you rightly pointing out, is getting into a new zone and getting stepped up. We are hoping that the conditions which are developing will sustain these growth rates from a macro perspective, and to that extent, some of these names that figure in our portfolio are largely a consequence of that we are seeing ultimately the next round of growth being more volume-led growth, and for companies which are also becoming a little more strategically well-positioned from the perspective of taking up the value curve. So that story still kind of holds relevant with many of our auto companies that we have in the portfolio, and that's also the reason why it forms a larger part of our overall exposure today.
All right, Taher, we're going to leave it on that note. Always a pleasure speaking with you. Thank you very much for joining in. We're going to take a break now, but more on stocks and the markets on the other side.